Is it cheese? Is it a slice of cheese? Is it a slice of plain, or is it a slice of regular, Carol?
Or just the crust.
What do you call it? Yeah, what do you call it?
I'm an eggplant, double
No,
eggplant.
what do you call the slice of pizza? Is it plain, is it cheese, or is it regular?
Cheese peas.
Okay, yeah.
Cheese peas.
Same with me.
Right?
Yeah, well, we didn't grow up in New York City proper, I guess, and that's what that means. What about you, Charlie Pellet? Is it a slice of cheese? Is it a slice of plain or a slice of regular?
Give me a plain. Give me a plain to go.
All right, there he is, New Yorker Charlie Pellet.
Cheese peas.
Exactly. Here's what's going on in markets right now. Nothing plain about today's trading. We have got a very choppy session. The S&P swinging between gains and losses. 28 minutes to go if you're watching the clock. We have got the Dow higher, S&P, Nasdaq. They are both lower. But right now we have got the 10-year. Let's begin with the 10-year yield, 2.38%, because the 2-year is at 2.44%. Equities reversing gains. Treasury yield surging as that solid jobs report buttresses the Federal Reserve's case to use aggressive rate hikes to tackle inflation. Spot gold down 0.7%, $19.24 the ounce. West Texas Intermediate crude down 1%, $99.28 a barrel on West Texas Intermediate crude. Getting word from the Broadway League that Broadway's mask and vaccination policy will remain in effect until April 30th of this year. New York City, meanwhile, delaying a plan to remove the mask mandate in city schools and daycare centers for children under 5, saying cases of COVID-19 are rising again. Dr. Andrew Pekosh is a professor of molecular microbiology and immunology at the Johns Hopkins Bloomberg School of Public Health. He says he and his colleagues are constantly on the lookout for the next variant.
Public health officials, scientists like myself, we're constantly searching for variants that give us signatures that potentially they could be different from the circulating variant, Omicron in this case. And we're also looking for clusters of cases that are occurring that are localized to one geographic area, one town, one city, that might give us another sign that a new variant is emerging. Right now, nothing looks concerning on the horizon, but public health laboratories are still busy monitoring things and keeping an eye on things.
And that's Dr. Pekosh with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks, Pfizer lower now by 0.8%. We've got BioNTech, its German partner, the German partner of Pfizer, BioNTech, up now by 3.9%. The ADRs there, AstraZeneca's ADRs up 0.6. Moderna up by 2.2%. J&J Johnson & Johnson up by 0.3%. Again, recapping, mixed Friday. The Dow holding on to a gain of 9 points, S&P down 8, and right now we have got Nasdaq as we take a slice of the market down 48 points, down 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Oh my God, the conversation we're having. Do you call it plain? Do you call it cheese?
Where did you grow up? Why do you call it cheese? Why do you call it plain?
See, and I'm always putting something on my pizza, so I'm always like, I want a cheese pizza with whatever on it.
No, I mean, I
Double
walk
eggplant.
into
That's what we do.
a
crust.
pizzeria in the city in Brooklyn, and I just get I say a slice of cheese.
I just want a slice.
Yeah.
But then there's so many different.
Please, may I have a slice of cheese?
Let's just get it, because this is the
Always
story.
say please.
You'll understand why everyone is talking about it, retweeting it. It is among our most read on the Bloomberg, and it's about the pizza principle, a mainstay of New York economics for decades being abandoned.
Amelia Pollard is one of the writers, or the writer on the story, I should note. She's consumer reporter for Bloomberg News. She's with us in the Bloomberg Interactive Broker Studio. Amelia, let's start at the top. What is the pizza principle? It's an economics term.
It is, yeah, and thank you so much for having me. But so basically, it's an economic principle that's specific to New York City that dates back to 1980. It first came up in the New York Times, and it was proposed by just a regular New Yorker named Eric. And he said that he had noticed that
regular
since
New Yorker.
I know, you're just your average Joe New Yorker.
Sorry, all you Erics out there.
Yeah, and he had noticed the principle, which is basically the idea that a Subway fare and a cheese slice, or plain or regular, if you're from New York, should always be the same and have always been the same since like the 1960s.
Really? They really have been?
They've really tracked for decades, and now, so the whole news right now this year is that the MTA is freezing prices at $2.75 for at least this year, probably longer, as they try to attract riders back to subway cars, which has been dropping. And cheese slices are soaring in their prices. So that's it's basically an obituary to the pizza principle, the end of it as we know it.
What is it about what goes into a slice of cheese pizza that is causing prices to increase?
Everything. But basically, first, on the ingredient front, what I heard from pizzeria owners was flour is the biggest price burden right now. I mean, it's by weight probably the most intensive ingredient you're using for pizzas, and it's increased 11.6% in cost in the last year alone.
In the last year?
Yeah, and so that's also, and then you have other things like commodity costs. You have other things like utility gas has increased a lot. It's up 24% this past year, and labor costs are kind of the final rub in all this. And one pizzeria owner in Greenpoint, Brooklyn, told me he had increased the wages for.
We're talking about Pauly G here.
We are talking about Pauly G, but
the
Pauly
people
G,
who live in Brooklyn know who Pauly G is.
Yeah, Pauly G in Brooklyn told me that he had increased the wages for front of house workers by 50%. So, I mean, that's just eating into the owner's bottom lines across the board, and so they're raising prices.
We just couldn't believe you didn't do the famous Ray's, famous original Ray's. Like,
I know.
Restaurant you'd have to go to. Where is the Ray?
Like, which is the? I know.
Which is the
I
one?
used to think it was the one on 6th and 14th.
I have no
or
idea.
I think is it 6th and 14th?
I know that, and
right?
it's funny. I got into that online. I mean, there are all these like imposter Rays, but I mean,
Exactly.
some of those like iconic New York establishments. I went to one, for example, near Madison Square Garden. I won't mention the name, but they were charging $5.50 for their cheese slice. So those kinds of like iconic tourist attractions, they're like
It's
way
an
above.
outlier.
Yeah, they're above and beyond the $2.75 at this point.
Is there some sort of big asterisk with this because of the fare freeze from the MTA?
Yeah, so I mean, obviously there are the people online who are going to say that, Governor Hochul could decide to not maintain the freeze into 2023, and then again, the pizza principle might be resurrected. But I think the big takeaway in the reporting and looking at the data was that Manhattan, the average slice of a cheese pizza is already at $3.26. So that's the average across the board. So they'd have to raise subway fares by 50 cents, which I would be surprised if that were to happen.
New York City, a really big place. There's Manhattan, there's Staten Island, there's the Bronx.
Yeah.
Where is it the most expensive?
Well, the biggest price increase was in Staten Island.
Yeah.
It's a huge jump, but Manhattan is by far the most expensive at $3.26.
Okay, just in 20 seconds, is there any sort of correlation here to economic activity or GDP? Why do they match up?
Yeah, I mean, there's a lot of kind of speculation online whether there's some kind of like underlying foundational economic principle. I think it's just a fun New York economic idea. Coincidence and like beloved of New Yorkers is to have a cheese slice. And
Just going to say, I know what Mike McKee should ask Jay Powell next FOMC meeting.
Got a question from a New Yorker here.
About the pizza
That's the
principle?
question.
All right, great stuff. Great Friday story, just a great story overall. As we said, among the most read on the Bloomberg. Amelia Pollard, she's consumer reporter at Bloomberg News.
Let's get to Washington, D.C., where I guess they have some pretty good slices of pizza as well.
Do
Nancy
they,
Lyons.
Nancy?
Yeah, they're not as famous as some other places, but they do have good pizza.
Okay, good.
Anyway, Attorney General Merrick Garland is being careful in his words concerning the Justice Department's probe into the events of January 6th. He was specifically asked today about a federal judge's finding this week that former President Trump, more likely than not, committed felony obstruction in the effort to overturn the 2020 election.
The only pressure I feel, and the only pressure that our line prosecutors feel, is to do the right thing. That means we follow the facts and the law wherever they may lead.
Attorney General Garland has previously vowed to hold all January 6th perpetrators accountable at all levels. Well, a man who drove a pickup truck filled with weapons near the U.S. Capitol on the day of the riot will be seeing some prison time. Lonnie Leroy Kaufman was sentenced today to 3 years and 10 months in prison, as well as time served. During a search of his truck, they found a cache of weapons as well as notes, including names of, quote, the good guys and the bad guys. The newest generation of young adults in this country may carry an unexpected distinction.
About 1 in 5 American high school students, 22.5%, don't identify as heterosexual. That's according to a Centers for Disease Control survey from the first half of last year of about 8,000 students. It's the most of any other generation before them, and it's in line with a Gallup poll taken last month that found almost 21% of Gen Z is in the LGBTQ community. The CDC survey also found 1 in 3 high school students experienced mental health challenges during the pandemic. The numbers were even higher among LGBTQ students. In Washington, I'm Nathan Hager, Bloomberg Radio.
And I'm Nancy Lyons.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. All I can say is after talking about the pizza principle, I am hungry.
Are you in pizza night tonight?
Yeah.
I should clarify for people who were listening earlier. One thing that I've talked about when we talk about inflation, Carol, is that we've ordered the same pizza for almost the last, 20 months, every Friday night, and it has not gone up in price.
I have to check too because I'm pretty consistent.
Like
it's
we order the exact same
pizza.
thing because we're so cool and we do so much on Friday nights. But it
Consistency
hasn't
can
gone
be
up in
kinda
price,
nice.
and all we hear about is inflation, 7.9%.
Did you ask them?
I order online. I will
You
ask
should put
them.
a little, like in the memo section, say, hey.
No, I'm going to go in there and talk to them.
All right. Meantime, one of
But
the
then
big.
I don't want them to raise the prices.
I know you're going to be like.
Oh, they're like,
you'll
oh,
be
that's a good
Yeah,
idea.
that's a good idea. Exactly.
Maybe we should.
All right. We were talking a little bit about this with our TV colleagues about what's going on with the U.S. listed Chinese stocks, and we have seen a rally in the Nasdaq China Dragon Index, and this is because Chinese authorities are preparing to give U.S. regulators full access to auditing reports of the majority of the 200-plus companies listed in New York as soon as mid-year, making a rare concession to prevent a further decoupling between the world's two largest economies. Bloomberg News, this was their scoop.
Yeah, this was a big one, and it caused the Chinese securities listed ADRs of Chinese stocks to move higher. The China Securities Regulatory Commission and other national regulators are in the process of drafting a framework that will allow most Chinese firms to keep their listing. That's according to people familiar with the process, asking not to be named because they're discussing a private matter. However, the government is prepared to accept that some state-owned enterprises and private companies that hold sensitive data will be delisted.
Which is interesting. So this is definitely, though, a step forward. The framework expected to provide clarity on what data may trigger national security concerns, according to those in the know. Regulators are debating whether companies that deal with consumer information, such as Alibaba Group, would automatically fall into that category, according to those in the know, adding that processing large volumes of such info wouldn't necessarily make a firm a security concern. So this will be interesting to see exactly what happens and which ones might get delisted. All right, you're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. 13 minutes ago, ahead of the closing bell with the Dow, the S&P, Nasdaq trading mixed right now. We've got the Dow swinging between gains and losses, up right now by 8 points. The S&P, Nasdaq, they're in the red. S&P lower now by 7, down by about 0.2%, and Nasdaq down 53, a drop there of 0.4%. Jobs Friday, equities reversing gains, Treasury yield surging as that solid jobs report boosts the Fed's case to use aggressive rate hikes to tackle inflation. 10-year yield 2.38%, 2-year yield 2.44%. Spot gold down $13 the ounce at $19.23, drop there of 0.7. West Texas Intermediate crude down 0.8%, $99.42 a barrel on WTI. So again, recapping, stocks trading mixed right now with the S&P down 7, choppy session, drop there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. The Biden administration has once again called for higher taxes on affluent households to cover the cost of extra spending. Specifically, the administration's just-released budget plan proposes a new minimum tax of 20% on the full income, including unrealized capital gains of taxpayers with wealth of more than $100 million. This is both radical and demanding. Complex rules will be needed to allow for the valuation of assets that can't easily be marked to market and to let taxpayers settle their liabilities over time. In short, this proposal, like the budget as a whole, just isn't happening. That's not entirely surprising, but the administration's continuing failure to wrestle with the implications of its spending ambitions remains disappointing. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, what a week. And we've just got about 10 minutes left to wrap up the Friday trading day, the first trading day of the second quarter. And as you know, as we broke down yesterday, it was quite a first quarter. Bouncing around again today on a big jobs report.
Yeah, I was going to make a joke about the quarter, but it's not that funny that we're, on pace for a winning quarter at this point with the S&P 500 higher by just
April
0.05%. Let's get into it with Cole Smead, President and Portfolio Manager at Smead Capital Management. He joins us on the phone from Phoenix, Arizona. Cole, how are you?
Doing well. How about you guys?
We're doing well, thanks. Hey,
how was the quarter for you guys?
Yeah.
It was a great quarter. It was quite a bit of fun because when everyone thought that energy is the problem of the world, and they wake up finding out that it's what creates order and security, you can make a lot of money when those changes take place.
So what did you see in the quarter in your portfolio? What can you talk about how you did at the quarter?
Yeah, so I mean, we're the largest energy owner you practically can find out there in the mutual fund space, both in our U.S. fund and our international fund. That means in a prior time you had to look stupid or feel stupid as you wanted to be a buyer of those things, and you finally started to see some of the reward. But I think what investors are still completely missing is, just use what Warren's doing right now. Buffett's out buying Occidental, and he controls close to 25% of the business, and he's just looking at what the capital structure looks like versus what it looked at a prior time, and he's looking at the free cash flow creation versus what it looked like at a prior time, and the return on equity and things like that. And it's like a Ben Graham exercise. Occidental's producing return on equity like Coca-Cola did in '88 when he bought Coca-Cola at much higher prices than you could have bought them in the 10 prior years. And investors are unwilling to follow Warren into that. And it just goes to show you how despised the energy space is today. But as people raising capital and seeking out new capital from investors in our funds, it's great because we got great companies, great prices, and money coming in.
So do you think there's still room to move higher on these commodities, on these energy stocks, or is the turbulence and disruption that we anticipate lasting for, X number of months into the future, is that priced in already?
Yeah, from a historical framework, this looks a lot like the price shocks of the 1970s. And what those did is they became the prices you moved to became the new floor, okay? So 90's the new floor is how I think about it. And in the interim, we could see squeezes that continue to take us high because there's not supply out there. So if you're Vicky Hollab running Occidental Petroleum, who I consider maybe the best in the business, or you're like Derek Evans, who runs Meg Energy up in Canada, you have the greatest oil salesman in the history of presidents right now, where he comes in, he does what he wants to do, and that just drives the price of oil high. And it's a great environment for these producers. So it's wonderful. Now, that being said, people are using what's going on in that world to say, share of wallet and the consumer, this could be really hurting them. We're nowhere near the share of wallet that we had back in 2008 because cars are more fuel effective. And then secondly, we're just not back at $147 a barrel.
Yeah, and I thought I just saw something that the president was doing to even force companies or push them in that direction to be even more fuel efficient. So there's a lot of interesting dynamics. But you're right in terms of the transition to a non-fossil fuel world. It is going to take time, and so as we move, as we recalibrate, as we readjust to maybe embracing more alternative energy, that fossil fuel world, maybe there won't be as much investment into it, and you do feel like there's going to be a higher floor under certainly the price of various energy commodities.
The more alternative energy we want to do, or green energy that we want to do, the higher it takes oil prices, because those things unsubsidized compete at higher price levels.
Yeah.
So at $60 a barrel, your wind and solar look really stupid economically speaking. At $100 or $150 a barrel, those compete more in the open market. So if you want to transition sooner, you want actually higher oil prices. So when the president says, hey, I want to bring the price down, well, that actually does not go well with a green future, because you want high oil prices for a green future.
Hey, let's go from energy to home builders, because Carol and I have been talking about them all week with rising interest rates for mortgages. They've been getting beat up a little bit, but you're still bullish on them. Why?
Because it's a secular growth story. I mean, we have millennials who have, really decided post-pandemic in a meaningful way that they want to own homes.
Yeah,
and
you're speaking to one.
What the traders are doing is they're looking, saying, oh, if the 10-year goes up, mortgages increase, no one's going to want to buy a house. But what they're under-assuming is the confidence that group now has in housing and the net worth that they've built up, looking back anywhere from 2 years ago, if they bought early on in that process, or I'm 38, I had kids younger, I've been a homeowner for quite a long time now, is that net worth they've built up. When you build up that net worth, you look and say, well, I want to go get a bigger house and a nicer house. And that is a huge multiplier in the economy. But like I said, most people are looking, saying if rates go higher, that's not going to work. The problem is the 70s were a boom era for housing, and they were terribly unaffordable. And that's where we think the market's wrong. We see it also in our international, we own lumber companies, right? So watch lumber ping around right now. We saw $1,400 in the quarter. And at those prices, you can get fabulously wealthy in the lumber business.
What's interesting, too, is even an older population, I think everybody thought they'd all go to retirement communities or wouldn't want to own houses.
And they didn't.
And actually, I just know from anecdotally, even members of my family, some of my older siblings who are still either working or something, but they're not going into retirement communities, they're buying homes. And they're just going to places where there's lower taxes or nicer weather, basically, or warmer weather. So it's interesting.
No question. Boomers like their houses.
Yep.
And I think the other dynamic that brings up, too, Carol, I think is really important. The person in control right now of the economy in so many respects is a working mother with 2 kids. I say that because if she doesn't want to go back into downtown to go work, congratulations. Office has got to shift. If her parents aren't going to be as far away as they used to, they're going to move closer to her. In other words, I think the economics are moving to that type of consumer and household and that decision maker.
Right.
And so I look and say, hey, we got these malls. They got great property, but to your point, there's boomers, so healthcare could grow in malls, office could grow in malls because there's suburban locations close to her.
All right, really quickly, 20 seconds. If you have new money to commit, where do you put it? Very quickly.
Absolutely love the energy business. It's the most underallocated space. It's the easiest game in town. go buy Oxy, go buy some oil sands business in Canada, go buy Continental. It's just too much fun.
Well, and it's been such an outperformer in the last year. It's a outperformer this year. We certainly saw it in the quarter as well. Hey, Cole, great to have you back with us. Cole Smead, he's president and portfolio manager at Smead Capital Management. Their value fund, the Smead Value Fund, by the way, beating just about all of its peers over the past 5 years, returning on average nearly 15% annually. So great to check in with him. We're seeing some buying into the close on this first trading day of the second quarter.
Yeah, we are, but still within a relatively tight range for the day.
Yeah.
But yeah, looking like we're going to end on some gains.
Yep, not big moves, but nonetheless, we're moving towards our highs. All right, time to head over to our TV team for Beyond the Bell on radio, TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Gina Martin-Adams in here, counting you down to the closing bell, and it'll help take us beyond the bell. It's our global simulcast with Carol Massar and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, and YouTube. And Carol, we started this morning, of course, off with that jobs data. And I guess there was a little bit of something in there for everyone, but overall, it seems people are taking it as a, I guess, positive signal.
Yeah, I certainly feel like we're seeing that in the last few minutes of trading, right? Again, we're seeing some buying on this first day of the second quarter, seeing us move up to pretty much our highs, it looks like, on both the S&P and the Dow. You like to watch the small caps remain. I do too, and we're seeing the small cap outperformance once again in today's trade, up almost 1% on the Russell 2000.
Yeah, but not a ton of conviction today overall in the S&P 500. Kind of choppy. Trading within a relatively tight range. In fact, the S&P 500 moved between gains and losses 11 times in today's session.
You wonder how much of that, again, comes on big economic data day, big economic data week, of course, jobs day. But then you push forward, Gina, to just the moves in the bond yields. And I saw an 18 basis point move on the week, and you think that that's big. And then you're like, oh, we're already coming off of last week's moves, which you'd already seen a 30 basis point move higher in yields. 4 straight weeks of yields moving higher. This has been a huge rate of change.
It has been a huge rate of change, and it certainly has created a lot of nervousness in the equity market and the broader financial markets. You know, there's not a minute that goes by in the day that we don't talk about the yield curve signal and what it means for a potential recession going forward in 2023, 2024, whatever it may be, and that's starting to get reflected in confidence levels at large.
Yeah, absolutely. And of course, we're getting the closing bells here in New York on this Friday afternoon. The Dow Jones Industrial Average going to finish the day up of roughly about 100 points, 140 points or so as we wait for these numbers to settle. That's basically good for about 0.4%, though the Dow Jones Industrial Average is going to finish down on a weekly basis by about 0.1%. The S&P higher on the day and going to be slightly higher on the week, just fractionally, 0.3% on the day, about 0.1% on the week. The Nasdaq Composite higher by about 41 points or 0.3% on the day and about 0.7% on the week. There's your Russell 2000. It's higher by about 1% on the day. That's your outperformer here on the day. We should point out, not on the board there, but bank stocks and a lot of the tech stocks really took it hard. Bank stocks down about 6-7% on the week, as is the Philadelphia Semiconductor Index, which is down about 5% on the week, Carol.
Yeah, and just watching the VIX volatility index down about a point today and about a point for the week overall. So we did see some movement throughout the week, Taylor.
I think what is so interesting, Carol, is putting all of that in together, right? Some of the calmness within the volatility, but as Romaine was mentioning, it was technology and banks that are really getting hit hard. That's actually where I want to go next. We're going to do the reverse of this and look at some of the losers here on the bottom of the screen. I know for the radio audience, typically when I talk about the sector winners and the sector losers, we start with green, but it is so notable here where it is technology, banks, semiconductors that are all off anywhere of up to 2% on the day. So certainly seeing that pain today. Frankly, Carol, everything else is mostly green on the screen. It doesn't really feel broad-based, but at least here on this sector level, there's a lot of green. But it does feel defensive. It's utilities, it's household products, it's food and beverage, it's real estate. So some of those classic sort of inflationary bond proxies, but they're up almost 2% on the day.
Yeah, it does feel a little bit like a tortured trade, I got to say, on this Friday. Let's get to some of the gainers. We've been highlighting them throughout the day, and that has those U.S.-listed Chinese companies that trade in the United States. That blew Bloomberg News scoop that talked about Chinese authorities getting ready to basically give U.S. regulators full access to auditing reports of the majority of the 200-plus companies that are Chinese that are listed in the U.S. So they are among your top performers in the Nasdaq 100. NetEase up almost 7%, off its highs of the days, but nonetheless a 7% gain. Baidu again up about 9.5% at its highs, finishing the day with almost a 7% gain. So really some outperformance among those names. And I did want to mention, because we all could use a little chicken soup for the soul on this Friday, and after quite a quarter and quite a week, that stock, ticker is CSSE, up 44% today. And this is, as B. Riley says, the streaming video company's initial full-year guidance topped consensus expectations. And so some optimism. I should point out it's a pretty significant short, about 16% of float. So maybe there was a little bit of short covering, but nonetheless, a little chicken soup for everybody.
Yeah, we all need that on this Friday afternoon. Hey, let's check to the decliners right now. What's that, Romaine?
What?
With the soda on the side.
Yeah, of course.
Yeah.
Sounds good to me. Maybe a beer in a couple hours. Let's talk about JB Hunt. The Dow Jones Transportation Average slumping 4.7% today, the most since June of 2020. JB Hunt in there, and one of those that took a hit today. The trucking company having its worst day since October of 2020, falling to levels last seen in October of 2021. Higher fuel prices, rising inflation, Fed policy removing liquidity, all among the risks that Stevens analyst Jack Atkins sees.
I found this sell-off interesting. I mean, it wasn't just JB Hunt, but you talk about Old Dominion, Norfolk Southern, Union Pacific, CH Industries. Like all of these freight stocks just sold off all of a sudden. Was there a real catalyst?
The only catalyst I found was Stevens analyst Jack Atkins' comments. Nothing else there. Yeah. So, yeah.
How'd they do in the first quarter?
I don't know off the top of my head, Carol. You know. Romaine, do you know?
Not yet.
Okay. Romaine's going to look it up on the terminal while I go and talk a little bit about Apple. Shares finishing the day down by about 0.2%. It fell after being removed from JP Morgan's analyst focus list. The firm cited a pullback in consumer spending. Also, it's Apple's birthday today. In 1976, Steve Jobs and Steve Wozniak founded what was then known as Apple Computer as a business. And Rivian falling 7.5% on the day. The company in a filing yesterday saying that Russia's invasion of Ukraine adding to supply chain pressures, costs, and blaming the dispute and the pandemic and inflation for, quote, disruptions to and delays in operations. 7.5% lower
I'm going to take it on over, Tim, as you talk about sort of the equity market folded over, due cross asset for us as we typically do, and take a look at the bond space. And I'll just, again, you guys point to the front end of the yield curve. It has just been a relentless move higher. This is on the week. 2-year yields, Gina, you're up 18 basis points on the day. Exactly 4 weeks ago, that 2-year yield was a 147. We are now at a 245. So you're looking at a 98 basis point move in just 4 weeks alone. Really incredible when we think about rate of change. And then, of course, the repricing, Gina, as we think about your world of equities.
Well, and you think about what the Fed has done. The Fed has had this vicious turn to a significantly more hawkish state as well. And I think that's getting reflected in both markets. The 2-year yield is the basic benchmark that we use for the valuation for the S&P 500. So as the 2-year yield goes higher, that much more pressure gets put on things like economic growth, broader employment conditions, wage growth to really make up for the bulk of the outlook for the equity market, because you can't count on valuations when yields are rising.
Yeah, and you got the 210, the 510, the 530 all inverted here. I'm curious, though, when you look at the real yield, remember the 10-year real yield, which we talked so much about? I mean, we did start to see a little bit of a steepening there, but that's still negative.
Yeah.
And I wonder if we have to wait for that to maybe get a little bit closer to the waterline and even turn positive before we should start worrying.
Typically you do. Typically you don't even worry about the equity market at large until real rates are in positive territory. But clearly this year's been different on a number of fronts. I mean, stocks fell 15% from their peak to trough. So I think the market is definitely very nervous about the volatility that has emerged in the rates market over the course of the last few months.
And we talk about the price of pizza. The real inversion out there right now is the pizza to MetroCard curve.
Yeah, but Tim, I mean, should we tell Romaine about the real asset price that we're following today?
Yeah, we did something special for him a little earlier in the day.
So, Romaine, as April Fools, the terminal has allowed you to mint your own NFT. We have minted an NFT for you. You actually did pretty well. You're up 5.5% on the day.
Okay.
That's pretty good.
And you
That's better than
started your
mine.
value at about $38,000. You gained
Wonderful.
$2,000 on the day.
Okay, thanks. So where does all this money? Is Tim just pockets the cash on this?
I wish. I mean, I've gained 3.4%, so cool, $2,400 so
Oh,
far.
he's
But
outperforming you.
yeah.
Wow.
I think that was a shot across the bow.
When do
Romaine.
you
I
guys
don't know.
do this? When do you have time to do this?
It's
Is there a
a
meeting
secret.
that I missed?
Yes,
Okay.
it's a secret. We'll never tell.
Unbelievable. Pizza Principle. Let's talk about it because this is one of the most read stories on the Bloomberg. Pizza prices, right? You talked about this, Romaine.
Yeah.
About pizzas in the price of pizza in New York and the cost of a metro or trip on the subway, right? They've been in tandem, and now we're seeing some disconnect. That pizza prices are getting more expensive. This has been decades in New York City in terms of New York City economics.
Can I just say, I love Bloomberg because I love how they sort of take, I guess, these sort of rather pedestrian things and use them as a way to kind of illustrate what's going on with the economy, whether it's the pizza principle or the Pret index that would use to kind of track people going back to work. Or a lot of really creative people here who I think find ways to kind of show what's really going on with the economy.
Yeah, this one I think a little bit skewed by the fiscal support for the MTA and the billions of dollars in bailout that the MTA got, and saying that it would freeze price increases as a result.
How does the MTA use that money? Have they put it to good use?
Subway still takes me quite a while to get home. So
yeah. I rode the subway the other day.
I ride it every day.
It was it was interesting.
Yeah, some days are better than others.
Okay.
Yeah. If you're watching this outside of New York, though,
interesting.
come visit us. Yeah. Ride the subway.
The city is open, and pizza's a little bit more expensive than it used to be.
Yeah, go walk off that pizza.
All right. There you go. It's been quite a week.
What does Carol put on our pizza? You think she's pepperoni?
I know what she puts on. Eggplant. She told us earlier.
Double dose of eggplant, and the crust has to be well done.
Do you guys call it cheese pizza, or is it a plain slice, or is it a regular slice, or
What do
is
you
it
call
a cheese
it?
slice?
Tim, in Cali, we do it right. Tim and I just call it regular cheese.
Oh,
right?
I just call it cheese. Yeah.
Cheese
pizza.
Yeah.
Cheese
Yeah.
The Californians know what's up.
California.
Exactly. That's
Yeah,
what I'm
you
talking
guys
about,
really
Taylor.
know.
We got
You
our
do that
NFTs
weird
too.
deep dish in Chicago, Romaine.
Don't you diss dish.
Oh.
Don't.
Oh my God, can you tell it's a Friday? It's a Friday. All right, we got to run, guys. That's going to do it for our cross-platform coverage on TV, on radio, and YouTube. Beyond the Bell. Catch us again, same time, same place on Monday. Have a good weekend.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Oh my gosh. I don't even know what to say.
Pizza.
Pizza. Happy weekend, everybody. Get your pizza on this Friday. In the meantime, let's get a slice, perhaps, of world and national news.
Nancy Lyons is standing by in D.C. Hey, Nance.
Hey, Tim. President Biden says the country has gone from being on the mend to being on the move. He is applauding today's jobs report that shows the U.S. adding 431,000 jobs last month. And he's especially proud of the drop in the unemployment rate, now 3.6%, down from 6.4% when he took office.
The fastest decline in unemployment to start a president's term ever recorded. In fact, there have been only 3 months in the last 50 years where the unemployment rate in America is lower than it is now.
Biden says he's also turned around the deficit, which had been going up every year under his predecessor. But he says the job isn't finished, and he plans to improve the fiscal outlook by imposing a 20% minimum tax on billionaires. Amazon workers at a New York warehouse have voted to join an upstart labor union. It gives organized labor its first foothold in the company's U.S. operations, and it could embolden workers at other employers. Union organizer Chris Small says he hopes the movement spreads.
We went for the juggler, and we went for the top dog because we want every other industry, every other business to know that things have changed.
Chris Smalls will have a second opportunity to extend his victory April 25th when workers at another Amazon facility on Staten Island vote on whether to unionize. The Biden administration says it plans to lift Trump-era border controls that allowed authorities to quickly expel migrants and asylum seekers during the pandemic. The public health authority known as Title 42 will end May 23rd. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Oh my God, we have so much of Friday on the brain. We did want to mention an Amazon story because we didn't really see the share price, right? It didn't move too much on this news. So let me just pull up how it closed. Up just 1/3 of 1%, so up $11.
Yeah, this was really interesting because I actually thought that look, maybe it was priced in, Carol, and maybe this was widely expected, but when you see a labor movement such as this gain steam, with a vote like Nancy talked about in New York, I was surprised not to see shares move lower.
Yeah, 2 years ago, Amazon's general counsel suggested focusing public attention on fired employee and labor activist Christian Smalls because he wasn't smart or articulate. On Friday, Smalls led the fledgling union he founded to victory at one of Amazon's New York warehouses, a seismic event, according to our reporting, that could upend the relationship between Amazon and its workers, as well as help revitalize the struggling U.S. labor movement. We've talked so much about the demise and really power of U.S. Labor unions.
Yeah, the election at the what's known as Amazon's JFK 8 fulfillment center in Staten Island, it wasn't close. The Amazon Labor Union won 2,654 yes votes versus 2,131 no votes for the company. After signing the election results, you mentioned this, founder Christian Smalls clapped, pointed his fingers to the sky, and raised his fist in triumph.
So Smalls. Our reporting says a characteristic small zinger. Quote, "We want to thank Jeff Bezos for going to space because while he was up there, we were signing people up."
Well, you know, I think that's also a nod to Jeff Bezos thanking Amazon employees right when he got back to Earth after going to space, which a lot of people saw that and thought that was kind of a surprising thing to hear. He essentially said,
enabled them to do.
You guys, thank you. You guys made this all possible.
Well, this gets into, and this is that big conversation that we are having about, wealth creation here in the United States. You've seen the creation of some incredible, in terms of market caps, we talk about it, companies that have just created a lot of value and then sharing it with the employee base.
I do want to note Amazon in an emailed statement signaling that a lengthy legal battle could lie ahead. The company said it was evaluating our options, including objections based on the inappropriate and undue influence by the NLRB.
So in other words, stay tuned.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Turned out to be an update. Choppy session. The Dow, the S&P, Nasdaq all advancing, ending the day close to session highs. We had stocks rallying in the final few minutes of trading today, with the S&P moving higher after earlier fluctuations. The yield curve extending its recent flattening as investors evaluated the economic outlook amid tightening monetary policy and Russia's war in Ukraine. Let's begin with the 10-year. The yield 2.36%, 2-year yield 2.44%. The Dow, the S&P, Nasdaq all advanced, with the S&P up 15, up 0.3%. The Dow up 139, up 0.4. Nasdaq up 41, a gain of 0.3%. Spot gold down 0.7%, 19.24 the ounce. West Texas Intermediate crude down 0.9%, 99.38 for a barrel of West Texas Intermediate crude. Recapping, 10-year yield 2.36%, S&P up 15, up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So in our latest installment of the Editor's Roundtable, we look at a great feature in this week's issue. And Tim, it's a profile piece on U.S. Postmaster General Louis DeJoy. He's still on the job after many expected the Biden administration to replace the holdover from the former President Donald Trump's time in office. And the writer writing about it, he has written a lot about the USPS.
Yeah, Bloomberg News senior writer Devin Leonard, he wrote the piece. He does a lot on the Postal Service, including writing an entire book about the Postal Service. He joined us along with Business Week editor Joel Weber.
Yeah, if you were anywhere left of center and even maybe somewhere on the right, I think that there were a lot of people to whom consider Louis DeJoy a villain and still do. And he's been really quiet. So the way that the post office works is that the postmaster is not actually appointed by the president. It's a board of trustees that does that appointment. A board of trustees under Donald Trump brought DeJoy in. Everyone just expected Biden would toss him, except Biden can't do that because it's not appointed by him. So there's this little separation of church and state. But what has been remarkable about DeJoy's tenure, and this is really the first time that he's spoken, and that alone was interesting. So Devin has written a book about the Postal Service, but also nobody does profiles like Devin. And you really get this color from this guy because you see someone who was really successful in the private sector, has transitioned to the public sector. The Postal Service has just been mired in financial problems for years now. And yet it's almost like the agency is starting to turn a corner. How did that happen, Devin?
I guess he came in and he has a plan. And I mean, that was my whole thing, you know, with the story was I really thought the guy deserved a second look. The election didn't go badly. If DeJoy was supposedly Donald Trump's operative, well, Donald Trump lost the election. He might not think so, but and Joe Biden won. And then postal ballots were also really important in the Atlanta runoffs the Georgia runoffs, and the Democrats won that. So you know, the Senate flipped. So again, if he's the Manchurian Postmaster General, well, he's doing a pretty bad job. Then he introduces this plan. Everybody gets upset. Well, guess what? Anytime a Postmaster General introduces, rolls out a big plan like this, all these people, all these special interests get all upset. So I just, I wanted to look at the plan and talk to them about the plan. And, it's a little early to say whether or not the plan's working. Look, they did get some stimulus money after Donald Trump, vetoed a bunch in the CARES Act. So that's helping. But, I think he's really having an impact. We'll see what happens. He's still facing a lot of adversity, as, we talk about in the story.
What's this dude like? And by the way, Devin's book, Neither Rain Nor Snow, A History of the U.S. Postal Service.
Well, that was really crazy because the guy he hasn't done really any interviews. And so I told them, look, I'd like to do this, but I really want to kind of hang around with the guy and get a real sense of him. And then he just it's almost like he was unburdening himself or something. It's just the stuff that he said. He was really fun. He talks really fast. It's like his mind's racing, sort of faster than his mouth can keep up with him sometimes. But he just has really strong ideas. He's really sure of himself, and of course, he's a very successful entrepreneur. So of course, I think he thinks that he's right and everybody else is wrong. But
he had a
has
company, right? That he ran, owned logistical company.
Yeah, New Breed Logistics to customers like Disney, Boeing, Verizon, and the USPS. He sold it to XPO Logistics for in 2014 for over $600 million. So I mean, he's pretty confident in himself, and he doesn't really care what people say about him or think about him.
That's what I found most remarkable. I mean, he basically said he's at a place in his life now where he's the most comfortable, at least professionally, where he's ever been. He has no problem sleeping at night. And it seemed to be like
what he's having.
Yeah, it seemed to be like, well, I think it has to do also with $600 million sale of a company, right? That's not going to hurt.
That'll do it.
But I do think, Devin, there's this really interesting sort of feeling that I got from him that he's not letting anything on the outside burden him. His focus really, it seemed like, is the USPS.
Well, that's what he says. I mean, you could argue, Tim, that's a coping mechanism too. But I mean, he does have really thick skin, and he has a real sense of, as he said it, a lot of this stuff was BS. That's how he looks at it. He's just trying to plow through.
You buy it?
Do I buy what? That he's? I do think some of it bothers him, but I also think he's just some self-made man. He's convinced of his own righteousness, and I think that does enable him to tune a lot of it out.
All right, that was the voice of Bloomberg News senior writer Devin Leonard with Tim Mee and the editor of Bloomberg Business Week, Joel Weber, and just a portion of our editors roundtable this week. Basically, what we do is Joel comes up and says, "Hey, we got to talk about these three stories," and we have the domestic cover story, the international cover story. We talked about Eric Schatzker and the Vultures over picking up Russian bonds. The domestic cover story,
the international cover story, right?
Right, that was Eric's story. And then the domestic cover story was about Chris Paul.
CP3.
The playbook and his mentor, Bob Iger, formerly of Disney, and of course, Devin Leonard. He wrote the book, Neither Snow Nor Rain, A History of the United States Postal Service. He's written a lot of great stories, deep dives for Business Week on the United States Postal Service. But you can catch that in our weekend show on Saturday at 8 a.m. Wall Street time on Bloomberg Radio, or check it out. Get the whole conversation. It's 15 minutes of pure joy. Can I just say that?
You can.
On our podcast.
It is. It's also really fun for us. I mean, one of the nice things about the pandemic subsiding is we get to be with our colleagues again in the office. A lot of people are here on the same days, and we all just get together in the studio and talk about the way that the magazine comes together.
Yeah, and just some great stories, and really just makes us all smarter. Anyway, check it out. Coming up next, we're going to talk a little bit about it's National Autism Awareness Month, so we're going to get into that. And we're also going to then take you to South Florida, do some shopping.
Sounds good.
This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, this is Bloomberg Business Week. Carol Messer, Tim Stenovic, live in our Bloomberg Interactive Brokers studio. Coming up, we've got a guest. We've had him on a few times, and looking forward to checking in with him.
Yeah, Charlie Massimo, the Senior Vice President and Financial Advisor at the Wealth Enhancement Group. He's going to talk to us all about planning for families who are impacted by autism, as it's Autism Awareness Month.
Yeah, we're going to get to him in just a moment. Right now, though, we want to get back to some of your top stories of the day. On it, as always, Charlie Bell.
Hi, thank you very much. Here's what's going on. Turned out to be an up day. It was a wild ride. Big swings between gains and losses. In the end, though, we did have stocks gaining in the final minutes of trading. Treasury yield surging. That solid jobs report buttressing the Federal Reserve's case to use aggressive rate hikes to tackle inflation. So the S&P ended higher, up 15 points today, a gain of 0.3%. The Dow up 139, up 0.4. Nasdaq up 41, a gain there of 0.3%. 10-year yield 2.37%. 2-year yield 2.45% on the 2-year. Spot gold down 0.7%, $19.23 the ounce, while West Texas Intermediate crude down 0.8%, $99.50 for a barrel of WTI. Job growth remains solid while inflation is red hot. That points to an economy that's running too hot, according to former Treasury Secretary Larry Summers.
We do not do anybody a favor by overheating the economy. Because when we overheat the economy, the chickens do come home to roost at some point as the inflation has to leave the system.
And Larry Summers says strong employment is leading to higher prices, and that is putting pressure on the Fed to hike rates quicker. Summers was a guest on Bloomberg's Wall Street Week with David Weston, heard every weekend. Also tonight, 6 o'clock on Bloomberg Radio. Well, if 2021 was tough for car makers, 2022 isn't looking much easier. Major manufacturers, including GM and Hyundai Motor, posted lower sales for the first 3 months. Toyota managed to keep its position as the top seller. GM shares down today by 1.7%. Toyota up by 0.1%. Recapping, gold down 0.7. Crude West Texas Intermediate down 0.7%. Finishing the week below $100 a barrel. 10-year yield 2.37%. S&P up 0.3. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. As Tim mentioned, today is the beginning of Autism Awareness Month. According to the CDC, autism affects an estimated 1 in 44 children in the U.S. today, and as we know, Tim, impacts many more if you take into account those families with a member who has autism.
Charlie Massimo is Senior Vice President and Financial Advisor with the Wealth Enhancement Group, a voice that our listeners know well. He also specializes in planning for families that are impacted by autism. Charlie, it's good to talk to you again. How are you?
I'm great. Thanks for having me to get back.
Yeah, thanks for joining us on this. It's a really important one, and I want to talk a little bit about the misconceptions here, because I think, as you rightly point out, in your materials that you sent to our producer Paul Brennan, a lot of focus around autism has really been about kids, as Carol mentioned, but this isn't something that stops with childhood. And when we think about autism, we also have to think about adults who are affected by it.
Yeah, as a parent of 2 boys with autism, what I found out is, when they're in school, services were great. Once they age out, 18 or 21, services kind of fall off a cliff, and the onus comes back on the family to care for them on a daily basis, not only day to day, but the financial impact that has on a family for the rest of their life is pretty devastating for many.
And it's interesting. I was just checking. The CDC, I think, was it just last year, Charlie, that they put out an estimate on the number of adults living with autism spectrum disorder in the U.S., and I think it was like 5.4 million to about 2.25% of the adults in the U.S. So it's a significant and sizable population. Why is it that we haven't, as a society, you think, stepped up more in terms of our awareness and acknowledgement in doing more?
Yeah, I think you bring up a great point, and while it's changed, it's certainly I call autism the invisible population, because when you look at a child or adult with autism, sometimes it's really difficult to tell if they actually have autism. And you look at them and say, well, they're fine. And the issue is they're really not fine. And your point, 1 in 45 adults have autism. And it costs from the age of 18 for the rest of their life. The CDC also estimates it costs about $1.8 million per family to care for an adult with autism. And again, when you think of families that
say that again, how much?
$1.8 million.
Is that from childhood through adulthood?
No, it's most of that cost is 18 and after. It costs about anywhere from $2.3 to $3.3 million to raise a child with autism throughout their life. And most of that, again, occurs after 18. And again, the issue is while they're in school, a lot of those services are covered. After school, after they graduate, a lot of those expenses, fall back on the parents and those doctors and psychiatrists and programs that are really good in this country or in New York. A lot of them don't take insurances. It's mostly private pay. So again, when you think of a family that's trying to prepare for their own retirement or plan for a typical child, to then put an autistic child on top of that, it becomes very difficult for these families to plan throughout their life.
So, Charlie, what do you do when you try to specialize and help plan for families who are impacted by autism? How do you help families financially cope with this?
I think the first thing is we have to make them realize, what this is lifelong, and again, we have to make them realize what the true expense may be, and then I think we have to help them plan in buckets. Again, you can't. The biggest mistake I find families, they commingle all their assets together, their own retirement assets, their typical child's assets for college, and they plan in one bucket. And I think that's the biggest mistake. I think you have to really plan in buckets and carve out certain monies and understand what those costs will be for these families and for these young adults that, again, are going to need the financial support throughout their entire life.
What's a typical family that you work with in terms of figuring out a plan? Because I also do wonder, Charlie, that there are probably certain families that have more means, and they obviously can probably more easily do it. Then you're probably, I would assume, families that don't, and maybe they get more assistance from public assistance, but then there's probably folks in the middle. Just got about 40 seconds. What's a typical family like?
Yeah, I think, again, there is no really typical family when you deal with autism, but I think what you have to realize, and this is a misnomer, 55% of adults with autism receive no governmental supports for housing, and housing is the biggest issue because, again, most adults live with their parents until their parents die, and that becomes a critical issue. So again, housing is an issue that families have to realize they're not going to get much governmental supports for housing, so they really need to plan for the expenses of housing for the rest of their life for their children.
Charlie Massimo, Senior Vice President and Financial Advisor at the Wealth Enhancement Group. Thank you so much for joining us. I know you're also a founder of Autism Communities. I do want to note, Carol, that U.S. Autism Homes is having its first Doggy Dash in Southampton on Saturday, April 9th at 10 a.m. You can go to usautismhomes.org to learn more and to register.
All right. Great to check in with him. Right now, let's get back to World and National News. Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. America is back to work. That's President Biden's reaction to the jobs report from March that saw 431,000 new payrolls added and the unemployment rate down to 3.6%.
That's good news for fighting inflation. It's good news for our economy, and it means that our economy has gone from being on the mend to being on the move.
The president says job growth shows that his policies are working, but he also says more needs to be done to get prices under control. The president did not answer a question, though, about inflation outpacing wage growth in this report. The average miles per gallon for new cars will soon increase dramatically. Transportation Secretary Pete Buttigieg today announced new average fuel standards.
Today's model year 21 vehicles, the standard is 36 miles per gallon. By 2026, we'll be over 48.
Secretary Buttigieg says the change will make the country less vulnerable to global shifts in the price of oil and will also reduce carbon emissions. Workers at a New York warehouse for Amazon have voted to unionize. Bloomberg's Ed Ludlow on the significance of the vote.
It is a watershed moment for Amazon. Amazon has fulfillment and distribution centers all over the United States. It employs 1.6 million people globally, the majority of which are in the United States. And the consensus here is this was an unlikely union victory. Amazon has resisted unionization to this point. The question now is, do we see other cities, other states that have these fulfillment centers follow suit.
Bloomberg's Ed Ludlow says another Amazon facility on Staten Island will take a union vote April 25th. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, this story popping up, a reader alert on the Bloomberg terminal.
Yeah, this one is a good one. Duke fans are hiring private jets for Coach K's Final Four game. So, you know what? I thought of Paul Sweeney, our colleague Paul Sweeney. Is there any coincidence that he's out today? Is he at the game? I don't know.
I don't know.
I don't know. He's a big Duke guy.
He's a huge Duke guy.
Think he's on his way?
He said when he filled out, I think, his brackets, he just
starts with Duke and then everything else.
He just works, like them being in the finals, right? And then just works backwards. So it's really funny.
I heard him talk about that too, Carol.
So anyway, to some college basketball super fans, if they've got to charter a private flight to get to the game, they will do it. And as we were reminded by our producer, Ariagami, right, Duke play in North Carolina this weekend in the semifinals.
Yes.
Those are two big rivals.
Big rivals. So perhaps not surprising that private jet trackers are predicting the number of arrivals in host city New Orleans will soar this weekend ahead of Saturday's Final Four. Features a group of college basketball blue bloods. The first game is Villanova. They were the 2018 champs, of course, against Kansas, the runner-up back in 2012. You mentioned the rivalry between Duke and UNC for the first time in NCAA tournament history that has captured the attention of sports fans everywhere. Commercial flights to New Orleans are so vanishingly scarce, especially in the Tar Heel State, that diehards are rushing to those pricier alternatives.
Yeah, during the so-called Sweet 16 on March 24th, incoming private jet traffic into host city San Antonio doubled, according to flight data from Paragon Intel. President Colby Howard said he expects the trend will be magnified this weekend, given higher stakes, with an influx likely on par with when arrivals quadrupled into Minneapolis, let's say that again, Minneapolis, for the Final Four back in 2019.
The men's basketball semifinal is a huge event for U.S. sports fans, some of whom are willing to shell out thousands of dollars to see their favorite teams play in person in the single elimination tournament, which we, of course, refer to as March Madness. My bracket got shot on the first day, thanks to Kentucky.
So here's one, someone with, I guess, a plane for him and his friends cost about $20,000.
That's a lot. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. Jobs Friday turned out to be an up day for the Dow, the S&P, and Nasdaq. We did have the S&P picking up 15 points, finishing the week, heading into the weekend at 45.45, a gain of 0.3%. The Dow today up 139, up 0.4. Nasdaq today up 41, a gain there of 0.3%. Treasury yields surged as a solid jobs report boosted the Fed's case to use aggressive rate hikes to tackle inflation. The 10-year yield, 2.38%, two-year yield, 2.46%. Payrolls slightly missed expectations when the March unemployment rate fell to 3.6%. Spot gold down 0.7% today, $19.23 the ounce. West Texas Intermediate crude oil down 0.9%, $99.37 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as we wrap up on this Friday, one story that was among our most read on the Bloomberg on this Friday takes us to Palm Beach and its sizzling retail scene.
Amanda Gordon spends quite a bit of time these days in Palm Beach. She's wealth team reporter for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. Amanda, you write that retailers have followed their wealthy clientele down to the coastal town, where the result lifestyle is becoming more full-time. What are you finding when it comes to retailers as these NYC newcomers start to spend more and more money?
Well, the retailers want to be where their customers are, and there's just been, although Palm Beach has always been a place of high net worth and that sort of luxe, beautiful lifestyle, it did become a refuge during the pandemic, but it's sticking. So there are Manhattan and Hamptons brands that want to do pop-ups. Everyone follows their customer, and that's what we found in this story. There's this one mall or shopping center. It's in Palm Beach. It's hard to even think that there's a mall there, but in fact, there is a really big parking lot around this mid-century building in the Regency style. It's true, it's not exactly like a mall like any other. And all these New York brands have opened there since the pandemic started. And what we find is that there's a sort of sense of community that the mall culture has always helped foster, in the suburbs when they were first being developed. That's kind of the history of malls. And in this instance, there's this big boom maybe post-COVID, or at least at the moment, and this mall has become a hub for the sort of dynamism that's in the community.
Well, I also think about the community in general, right? You know this firsthand because you've been going back and forth there. I mean, how many people all of a sudden have moved down there? And I feel like there's been kind of a juice in terms of energy that's down there, right? A mix of kind of old money, new money, right? There's been a lot of movement, and it's playing out, it feels like, in the retail sector as well.
Yes, so there are, in fact, while this mall has become a hub for New York brands, there's activity all over town where vacancies are being filled and new shops are coming in. And one of the drivers of this is actually something we've probably talked about before, which is the New York restaurants. And the fact is that although people are craving the new and special, especially if you have decided to uproot yourself from where you'd been living and you're in a new community, you also crave the familiar, right?
Yep.
And you also crave that sort of kinetic energy of running into people that you know. And someone told me while I was reporting this story, it's not even what, it's who. It's the fact that when you go to this place, and there's a lot of outdoor space, beautiful landscaping, and it's not kind of like fancy and sort of in a formal or daunting way. It's very informal, which is kind of like Palm Beach, right. But you run into people.
It's like, as you write, a country club in some ways. And It serves as sort of a country club of sorts, especially at a time when, people do things there that you're not allowed to do at country clubs, like actually have, business dinners? You're not allowed to do that? I didn't know that. And also the waiting lists at these country clubs are so long that these newcomers aren't going to be able to get in anytime soon.
Yes, there is sort of a democratic nature to common spaces. It's not a public space. It's not a town space like the park across the way. But at the same time, it's a well-groomed space that is welcoming. And Samantha David, who had the idea to come in and revive this place, she had great timing because it all got into place. San Ambrose came in before, in 2016.
Right.
So
ahead of the pandemic, basically. Well, if you think about it, right?
Yeah, everything was set up. All the foundation was laid for this to happen. And one of the interesting things is that now that they have sort of the basics down, and they have these galleries in from New York, so there's this different kind of cultural life going on. And Jeff Koons was down there for his opening, and by the way, his work sold for $8 million. So this is a mall where a piece of art can be bought for $8 million. But in any case, the restaurant that's going to be developed out of a now vacant building, 200 seats on the waterfront, it's actually going to be the only restaurant that's public on the island, because the other dining areas are in the clubs. So it's just adding an amenity, and it means that the Palm Beach might become more open in a way.
Right, because you do feel like I've been down there just for work and stuff, and it does feel like it's the private clubs, and it's just very exclusive, and there isn't a lot of, or at least this is a few years ago, pre-pandemic, and this does feel like a very, very different take. What is it doing? It just sounds like then it's revitalizing all kinds of retail space in the area.
Yes, I mean, there are lots of other areas where you can shop. It's not that Palm Beach needs more retail, but I do think that we'll see it all being upgraded. And, for sort of the new generation of Palm Beach, it might be pink and green, but it's not as obvious as that. It's it's like a very pale pink, or there's an informality to it. And I
think of even the pictures you put or that are in your story, it feels like it could have been the Hamptons, or it could be a boutique in New York or downtown. Like, it really has a different feel.
Someone said it feels like Capri.
Right. It's just interesting, right?
Amanda,
well, the bones are beautiful, yeah.
I'm wondering about the sense of permanence that you got from the people you interviewed, the people you spoke to. Mm-hmm. Are these people moving from New York City to Palm Beach? Is this permanent?
Well, one of the things that we note in the story is that people are getting younger who are moving, and they have kids. And, the enrollment since the pandemic started at the private school on the island is up 35%. So what I have learned from my interviews is that the people here, the people who have moved, love the fact that they can run over to the school in 5 minutes. Someone said, I don't have to go to Randall's Island to see a soccer game, So there is this sense that there's less friction.
Right.
And there is a sense of, we've talked about this, a sense of worry about New York. Yeah. But, the people that I spoke to said, maybe when I first moved down, if I was talking to a young person in my office about coming down here, I might not have been sure that this would be a good move. But this person said, just a few weeks ago, they were all down here this week. I was telling them all, like, you should do this. So it's not just that there's a great mall, right? It's that there are the palm trees, the weather, this idea of a resort lifestyle full time, but you're also getting to work. So that said, in terms of permanence, it's not for everyone. And I have talked to some people who actually were down there for the pandemic who are now planning to come back.
Yeah.
So, and we know that New York is opening up. And I was just last night at the old Barney's department store on Madison Avenue.
And
full of life with a winter antique show. So things are coming back here too.
Amanda Gordon, what a great way to wrap up our week. Our thanks to her. For Tim Stanovic, I'm Carol Masser.